the ultimate sort of qualifier to show, real trading versus non-real trading. Because again, anybody can make claims, but those trading results that you're talking about, I've seen them, right? You've got excellent performance there on your MyFX book, which is fantastic. So walk us through a little bit though, Gary. I've got to know now. What pairs are you generally paying attention to? What favorites? You mentioned some favorites. What are you looking at? And is anything setting up right now for you?
Okay, so yeah, we got a few positions in on the euro US dollar. Now we're actually buying euro US dollar, and you look at the market right here, and you look at this downward trend. So I always teach the students that follow, and the clients that I have to communicate what we're doing on the trades that we're trading, is that the market may be long-term bearish, but that doesn't necessarily mean that we don't have some short-term upside moves that we can take advantage of. And so what we do is, based on that, the results you spoke about, based on the currency pairs we focus on and the strategy we use support and resistance in all areas. So Fibonacci's, highs and lows, supply and demand levels, all of those things act as support and resistance levels. And so what we do is we buy and sell at those support and resistance levels, and then we use a cost average. Now, some people frown upon cost averaging, but the thing is, what's key, and you mentioned early on, is that if you manage your risk properly with cost averaging, it can be very effective. A lot of retail traders don't do that, and that's why they blow up the trading accounts. So we use a cost average. Now, going back to the euro, we are actually long euro because we had a key level of support. If I go to a lower time frame, you'll be able to see it a little bit better right here. So here's a 4 hour. And you can see right here, we had a wave 1, 2, and then we had a 3, 4. And so as price held up at this level right here, we decided, okay, let's buy the support. Let's see if price can go back up to retest the 200 EMA. It didn't do that and broke south. So we continued to buy. Now, the most important thing is anytime you're trading, you have to have a way. You have to figure out what's the market going to do. And if I'm wrong, where's it going to go then? And if you don't know where it's going to go, then that's where panic starts kicking in. The biggest thing that traders start creating emotional rides is when they don't know what's going on with the market. So when something happens, and it happened to me 25 years ago. 25 years ago, I got into a trade. It was non-farm payroll. I didn't even know what non-farm payroll meant. And the market went against me, and I got into major emotional rides because I just didn't know what was going on. I said, man, there's support and resistance. The market's blowing through this. What's going on? But when you know where the market's going, and you've managed your risk properly, you can control those emotions. And so we stuck to our strategy. And so we're long euro US dollar, and we're chasing after this particular high right here. So we know that the euro US dollar is going to take out the high at around about 1.0839, give or take a few. So that's the target. So if we're long here and if we hold these longs, we can continue to hold these longs all the way through to this area right here and take a profit at that level. And the same thing applied to the euro US dollar today. We held shorts on the on the US dollar CAD, and we held shorts on that position. And if you look at this chart right here, we can see that we had the market creating this wave structure 1, 2, 3, 4, and 5. At the 127, it turns. We started to sell the US dollar CAD. It rose up a little bit and then dropped back down. And here's the 200 EMA. Can bang smack hit the 200 EMA at that 135.35 level, and that's pretty much where our target was. We wanted to take profit a little bit earlier than that, which we did. We closed out because the news was coming out. We thought, yeah, let's just get out before the news comes out. Took a profit and we got out. So important. Getting in, making sure you understand your trading plan. Understand that if things don't go the way that you expected, then have a backup plan. And the backup plan is then where's the market going? And understand that if you're going to manage your risk on the worst case scenario, not your best case scenario. And then thirdly, actually, then make sure that you take profits. A lot of people, traders, they struggle to take profits. They get into a good run. They start to see their balance starting to grow a little bit, and they get all greedy, and then they struggle to take profits. And they're like, oh, just another 2 pips, another 3 pips, another 5 pips. Eventually, it's gone 10 pips against them. They go, okay, I think I'm going to take my profit now, when it's gone 10 pips against them. So it's important for those sort of fundamental mental things to make sure that they get implemented in their trading.
Yeah, Gary, I mean, see, this is why I've always loved having you on the show, is because, people in the audience clearly who watch our content on a regular basis are going to say, well, that's very different than the way you trade, Nick. And the point is, I mean, I trade momentum, I trade pullbacks, I trail stops, I let winners run. But the point is, whether you're trading in a similar fashion to Gary, which, by the way, I do have some dollar cost averaging stuff that I do. I just don't talk about it nearly as much on my streams, and I shared this with Gary and within our Discord all the time. The point that Gary made, though, a couple things I'm taking some notes and I'm dragging them out from Gary's excellent veteran speech he just gave us. Keeping those positions so small is so important, whether you're dollar cost averaging or even if you're trading with a trailing stop or an aggressive tight stop on your trades. If you have an idea in the markets can do whatever they want. Keeping that position size small is really, really key because, again, the markets can do all sorts of stuff, and dollar cost averaging is not necessarily terrible. What's terrible is when you take giant trades and you're arrogant about your positions and you think you can't possibly be wrong. And Gary, you and I have been doing this a long time. You've been doing it longer than I have, and you know that the markets will humble you if you are not humbling yourself first. So excellent points there. And I also like, for those of you guys who like Elliott wave concepts and theory, Gary is your guy. I want to also say that he has a channel. We've dropped that link in the chat here. We're not done by any means. I just want to make sure that I announce that because, again, I don't do a lot of Elliott wave stuff, but I know a lot of people always ask me, hey, Nick, Elliott wave. This is your guy right here. Make sure to go check him out on the channel that we shared in the chat. Yeah, I mean, Gary, that's the thing. I think, there's some stuff I want to, we'll get to in a moment, specifically about the euro. Maybe James in a moment can assist us with some COT breakdowns on, the euro and things like that you just got done talking about. And maybe also we'll take a look at the retail sentiment. So lots of stuff. We're going to take a quick break and then we'll be right back with the show. Check it out right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show. Welcome back, everybody, to the show. We are not done yet. We are joined here by Tom, Mr. Simply Forex. Thank you so much for being here, Tom. Nick is going to take a short break, everybody. Nick is going to be coming back in just a few minutes, so don't go anywhere. We've been going for close to an hour and a half at this point, but we still have more news coming at 10 o'clock. We, of course, have the ISM manufacturing PMI numbers at 10 o'clock, so Nick will be back before then to cover that news and give you market analysis on that. But Tom, thank you so much for joining us here today.
No problem. How are you?
Yeah. So, Tom, we're going to go over some charts together. I know that I may not be as knowledgeable as Nick, but you certainly are. And so we're going to let you kind of lead the show today. Take us through what you're watching today, Tom.
Okay, James. How are you, mate? Anyway, you good?
Yeah, I'm doing great. This is my first time being somewhat of a host on the show. I have been a guest, but never a host before, so I'm excited about that. But yeah, take us through what you're looking at today.
Yeah, we'll do, guys. So there's not a great deal jumping out at me today, to be quite honest. But some interesting things that I am looking at are yen pairs, and it's a question of have they pulled back to represent value for buys, or are they on the brink of potentially a change in structure? And I'll show you what I mean, guys. So New Zealand yen, yeah, on the day chart, you can clearly see we are still in an uptrend, and for me, this upward structure will only change when we get a break of these lows. If we get a break of these lows, guys, then I'm not interested in buys. I'd be interested in more in shorts to potentially come down to some of these levels. So, is it the start of a potential break, to the downside, or is this excellent value to start buying this pair, potentially back up to here or back up to here? So I'm seeing this on a lot of yen pairs. What would I want to see to start buying this? So at least a daily candle, that's reasonably bullish. Yeah, so that's my first criteria. I need a bit of a bullish reaction off of this support level here. Okay, because yesterday's candle, doesn't look like much of a buying candle. Yeah, so I'm waiting for that to happen. And then if we drop down to the lower time frames, I'm just looking for more clues for me to buy this pair, basically. So when I say clues, I mean structure breaks and something that tells me buyers are taking control of the market. So, there's this zone through here, guys. So this has become interesting. It's almost ranging. Yeah, and I'll tell you why it's ranging, because we've clearly had a lot of selling pressure on this New Zealand yen from that day chart. Yeah, you could see sellers were pushing this down. All right, but it's got to a level of support. So there are buyers entering this market. Okay, so when you have this, buyers and sellers are kind of battling it out. I need to see a winner. I don't want to trade it while they are fighting, if that makes sense. Because while they're fighting, buyers and sellers, you're going to get price action, maybe like this, until we get a winner. And if buyers win, we get a break out of this range. Yeah, we get a break of these highs in here. Buyers have won. I would start looking for buys. Yeah. Whereas if we get a break down below this range, and a break of these lows, then sellers have won. So until I see, whoever wins the fight to the death between buyers and sellers, then I'm not interested until I see a winner. Okay. And that's simply what it would be, a break of this, it's only hasn't been much of a range for much of the time, but if we get a break out, I'm looking for buys potentially up here. If we get a break lower, like I said, we can take it down to that next level of support on that daily chart. So, really at delicate poised levels right now, a few yen pairs. If we compare, sorry, James.
Sorry, no, I was just going to mention that thank you for continuing on as we lost internet there for a second. I don't know if you noticed us freeze up and leave or not, but it wouldn't be a day in the office without Wi-Fi going out at some point. But we are back and we are running. So and we are joined by Frank now. Frank is here with us, joining the stream for a little bit. And again, guys, I'll just mention one last time really quickly. Don't go anywhere. Nick will be back to cover the ISM manufacturing PMI numbers happening here in just a few minutes. We can see actually here at 10 a.m. ISM manufacturing PMI numbers. So Nick, again, we'll be back in a couple minutes to continue on with Tom and with Frank, hopefully. So yeah, Tom, what else are you taking a look at today?
So yeah, yen pairs, like I say, there are interesting levels. So this New Zealand yen, I don't know how much you caught of that if the internet went down, but if we compare New Zealand yen, so this is at a level where it could start to bounce off or it could break down further. Okay, whereas Aussie dollar yen, we're currently already seeing a bit of a structure breakdown. Yeah, so this Aussie dollar yen pair, was in an uptrend. Yeah, we're getting higher lows, higher highs, but then we've broken this low. So for me, that is a structure change on Aussie dollar, Japanese yen. Yeah, this structure change hasn't happened on any of the other yen pairs. They are still, firmly in an uptrend. But this Aussie dollar yen, does this mean, we're going to see a bit of a change in trend for Aussie dollar yen? So, out of all the yen pairs, I certainly wouldn't be buying Aussie dollar yen for that reason. That is a structure break for me. Yeah, we're getting lower highs, lower lows.
Tom, I have a question for you.
Yeah.
Sorry, I didn't mean to interrupt, but
No, you go for it, Frank.
well,
I hope
first
your
of
back's
all,
all right.
how are you doing today?
I'm good, thank you, Frank. Yeah, not bad.
Good, good.
How's your back?
I'm good. Everything's good here. I was just gonna ask you, would you say that you're more so agnostic to the direction of these yen pairs, or would you have a bias towards some? Because I know you said there was a structural break on the Aussie yen, but at the same time, we're looking at overall yen kind of seeing some strength today. Would you say that? Oh, I already have this pulled up. USD JPY is very correlated with the bond yields, specifically the 2-year. And I was wondering if you were, more so looking at a buy on different yen pairs like Kiwi and Aussie versus dollar. Because I saw you said Kiwi dollar, there was some buying pressure on the day, but at the same time, kind of looks like a reversal from a longer
Yeah.
term perspective. But if we were to look at gold, which is having a nice day today, but also a falling dollar yen, I guess my question is, would you be more bullish dollar yen or more bullish Aussie yen?
I would be more bullish dollar yen for sure. Yeah. So, first and foremost, purely just if we just looked at structure of the market, yeah, if we looked at Aussie, let's take a look at Aussie dollar yen compared to US dollar yen, and let's start with the weekly chart. All right, so straight away, Aussie dollar yen, on the weekly chart, there is an area of resistance here, okay, which it is clearly hitting. All right, so we can expect some selling pressure in here. All right, whereas if we compared that with the US dollar yen weekly chart, yeah, this is the weekly chart, you have got free air. Yeah, there's nothing stopping this. There's no resistance. If anything, we've had a breakout of this area of resistance here. So purely from a weekly point of view, I would massively prefer US dollar Japanese yen. And then also, I mean, if we look at the daily, let's start with US dollar Japanese yen day chart. And again, if we just look at structure, yeah, this is still in an uptrend. All right. And potentially this gray zone, which was that weekly resistance level, somewhere in here, I'm expecting to see a bullish reaction, and we can take price back up to these highs. Yeah, we haven't had it yet. We're seeing nothing but negative selling candles, but there's going to get a point where it retraces to a point where, we can start looking to buy this pair. And now, if we compare US dollar yen structure to Aussie dollar yen structure, and this is just simple structural analysis, it's nothing too fancy, but I would base my decisions heavily on this. Aussie dollar yen, was in an uptrend, but now arguably a break of trend. Yeah, we're getting lower lows, lower highs. And we are not seeing that on US dollar Japanese yen. So, yeah, I would definitely prefer US yen over Aussie dollar yen as things stand right now. Yeah, that, you know, for the next couple of days or so.
Okay.
So yeah, that's what I'm seeing, guys.
Yeah.
And as
So
for
go ahead.
go
Frank.
ahead. Jimmy.
No, you go ahead.
Okay. As for the dollar in general, what would you say, I guess, short to midterm on sentiment wise? Because what we're seeing right now is less robust gains in the economic side of things. So we're looking at lower than expected or lower than previous NFP, expected higher unemployment rate, higher claims than last month. This morning, jobless claims came in higher, and then another contraction in PMI, which is supposed to be like 47, right under 50. I was wondering what you thought of dollar sentiment going forward. Do you think we can see a break here, or that there's enough buyers in the market to take it higher?
Yeah, I mean, good question, Frank. I mean, first and foremost, you know, I do what the market tells me I can do. Yeah, I don't pay too, obviously I'm aware of when the data comes out, how the economy works, and I keep an eye on these things, but I'm, you know, purely a technical trader. So what I will base those decisions on is what the charts are telling me. You know, that there's all the truth you need is in the chart. So, for example, US dollar pairs, it feels like US dollar strength has paused, okay, first and foremost. And I'll tell you what is a big example of that is when you get better than expected figures, like we did with initial jobless claims and ADP non-farm, yeah, you know, they were far better than expected, but we are seeing, you know, in this example, Aussie dollar, US dollar, let's drop down to the hourly chart. We are seeing US dollar weakness. Yeah, that is a really big indicator for me. If pairs start ignoring the news almost, yeah, because, you know, if you traded purely the news and you saw those figures today, you would potentially short Aussie dollar, US dollar. But the market has completely ignored those figures. Yeah, we're seeing quite the opposite. We're seeing US dollar weakness. So short term, you know, we're going to see a bit of a retrace, yeah, on some of these US dollar pairs. Where to, you know, is the $1 million question, and I will just trade my strategy until I get a setup. But you know, on the day chart, just looking at this buying pressure we're getting, you know, we could retrace into this gray zone, potentially, you know, up to here. But if we start looking a little bit longer term, and, you know, take a look at the weekly chart, there is no reason to expect anything else other than US dollar weakness. Yeah, because if you look at this chart, you know, that weekly chart has broken down. And the fact we had a range, yeah, and then it broke, this tells me that the longer term direction of this pair specifically, but the US dollar in general, is US dollar strength. Okay, obviously this can be impacted by, you know, the data that comes out, the NFPs, you know, interest rate decision. But looking at that chart, I'm expecting prolonged US dollar strength on a mid-range time frame. And the shorter time frame, I'm expecting a little bit of a retrace in this US dollar strength. So yeah, that's
Okay.
what I'm seeing.
That's a good point that I didn't think of. I think my screen time has ended, so I'm gonna pass it on to Nick.
We're kicking him out.
Bye, Tom.
Yeah, still out, Frank.
Nick was itching to get back onto the onto the
I
chart.
couldn't help myself.
He couldn't help having.
Thank you guys for the break. Let me just put my headset on.
Impressive stamina, Nick. You are, you know, this is 2-hour live streams, no messing around.
Sorry about that. I missed you for a second. I was just going to say thanks for the break to James and Frank. These streams are, they're long, and then we are committed today, though, to stick it out until we get numbers. I know you guys were just talking about the dollar a little bit, which I think will be very interesting to watch as we come into ISM manufacturing. Of course, I want to also mention, Frank talked about the forecast. We went over kind of what we're looking at for this event. And just a refresher for people who are newer to this stuff, ISM manufacturing PMI numbers are expected to come at 47. Now, manufacturing PMI, this is a look at how things are performing. We can go through this together. It's based on the surveyed purchasing managers in the manufacturing industry. Of course, this is up the chain. When we talk inflation, when we talk economic stuff, we usually look at the consumer a lot. Well, this is a look up the chain a little bit at manufacturing purchasers. And generally a reading under 50 shows contraction, which is what we're forecasting today. Again, that is what the Fed kind of wants to see. They want to see contraction in the economy so that inflation can kind of get under control. But a number above 50 would be incredibly, incredibly surprising and bullish, probably for things like the dollar. So it'll be interesting to see where we are. Of course, we don't know what those numbers are going to be. We're going to have to watch to see. Again, forecasts are for a contraction in the U.S. economy, which could put further downside pressure on the dollar. So we'll see where that comes out to. We're just about 9 minutes out, and Frank's got this beautiful chart drawn on my this resistance I know you guys were talking about with the dollar. Testing that 104 level, now trying to break back underneath here on today's movement. We have not talked a lot about indices today. Tom, James, you guys didn't really talk too much indices, did you? I don't want to repeat if we just did.
No, not too much indices. We did cover some euro, some dollar, little NZD, little AUD, but I will go ahead and back on out of here and let you guys finish up for the last 10 or so minutes until the news. So have a good rest of the stream. Tom, it was great seeing you.
Cheers, James.
I will talk to you guys later.
Thanks, James. Thanks for covering. Yeah, so Tom, one thing I want to talk about, I've got to ask your opinion on this. The dollar coming down, we got done talking about that. Of course, we're going into ISM numbers. But this dollar weakness, as it tests the lower limits of this support zone, of course, this is going to have ricochet effects on lots of different charts that we talk about on the channel. One that I thought might be interesting is the decline in the S&P 500, despite some of this dollar weakness. Of course, dollar weakness can sometimes give way to, equities getting a lift. We're not seeing that here today. Give us your breakdown, S&P, NASDAQ, Dow, anything you'd like. What are you looking at with the indices right now?
Yeah, well, S&P and NASDAQ are in uptrends and the Dow is in a downtrend. So that's, there's some conflict there, but S&P still a bit of room to the upside is what I'm seeing, guys, in terms of the weekly chart. I still think this 3,000 level here, is achievable. If we just, look at the structure, the weekly chart is building up. Yeah, we're getting these bullish weekly candles. Yeah, I think it still has a bit more room to the upside in terms of the weekly chart for the S&P. And those candles give me confidence in that happening. If we look at the day chart, yeah, I mean, it's in an uptrend as well. It could potentially be coming back to a good level of value. Yeah, as long as we don't start breaking these lows. If we start breaking these lows, I lose interest in buying the S&P because it's a daily structure change for me. But, bounces off of this moving average 20, I'm looking for a build up in H4, H1 structure. And then, we can potentially take price back up to that level I spoke about. I mean, right now, H4, just looking at the daily candles, will be in a downtrend, So what would I want to see to start buying this pair is pretty much a build up of structure again, guys. So, I tend to get my higher time frame view of the weekly and the daily chart. That gives me my bias of a pair. And then I'm looking for structure breaks, support and resistance breaks of on the lower time frames to enter, really, guys. It's not rocket science, but that's how I roll. And we're seeing there's a bit of a level through here, I would say. Okay, it'll be clearer on the H1 to see this level. But currently for me, we're in a H4 downtrend. Yeah. Could it come further? Yeah, of course it could. Yeah, it could keep coming lower. Yeah, we don't want it to break this, otherwise we lose interest. But all I'm looking for is a build up of H4 or H4 structure. So for example, it might not happen now. It might, happen in a couple of days' time. But basically, guys, I'm just looking for something like this, a break of these highs, yeah, and then buys are back on the table for me. Yeah, we can start looking at taking profit here and then leaving some profit to run back up to those daily highs. So, yeah, I think S&P is a buy once I see this kind of structure build up. Let's have a look at the NASDAQ, because I know that was tearing like a madman. Again, weekly. Yeah, the problem with, it's clearly in an uptrend. Yeah, I mean, anyone who's, traded ever can see that.
Right.
But the problem I have with this is how overbought this is, But having said that, look at the bullishness of this weekly candle. But, how I gauge overbought or oversold is how far away it is from my moving average 20. You can use RSI, other stochastics, but I can just see that is a million miles away from my moving average 20. And it's just so overbought, which, there has to be, it doesn't have to be, shouldn't say that, but, I'm expecting a bit of a retrace, potentially back down to some of these levels. But S&P easier to trade for me than this because of this, this rocket ship that is the NASDAQ.
The NASDAQ has been tricky because it's had at this point, when you were showing that weekly chart, it's had 1, 2, 3, 4, 5 weeks in a row prior to this one that were just straight green, like just straight run-ups. As you mentioned, on the weekly chart, you have key resistance that broke, and I mean, that gave way to a bigger push to the upside here that we've seen in the last 2 weeks. So where we currently sit with the NASDAQ, I'm no longer in my trade. I was in one for a while. I traded it long, caught a pullback and rode it up from last week. I was able to catch just this brief retest here. It was probably one of my better trades. I wish all my entries looked like this, but it was a rare occasion where it was just the perfect entry, and the trade just kept going. And now the question is, people have been asking me, Nick, are you looking to get back into the NASDAQ? And similar to yourself, I am bullish on it. The trend looks great, but when you have something like this that's just shot to the moon like this, a lot of people get in trouble chasing, right? They go, very heavy on a buy here, and they're like, it can't stop. And sure enough, it can stop. And so when that pullback does occur, I don't want to be, in trouble. I'd rather be, either not in a trade and it goes off without me, and that sucks, but it is what it is. And instead, the only way I do get into a trade is by patiently waiting for a retest of this upward trend. Perhaps somewhere around the 13,800, I'd be willing to look at a little bit closer this NASDAQ idea. And again, off the 4-hour chart, that is a pullback into an area like this, where I think we have pretty clear levels of past resistance that could actually act as support. Tom and I talk very often about broken levels of resistance turn potential support. I've got that 13,900 on my radar for NAS, but as Tom pointed out, that's a ways away. He's got the moving average 20. I've got my support zone, both of them far away from current prices here. Guys, I do also want to make sure we don't miss it. We have ISM manufacturing numbers coming out, PMI, in about 45 seconds. So I'm just going to set up our chart here for a second so that we can watch the reaction to the chart. I'm going to put our NASDAQ here in the top left so we can keep an eye on that since we just talked about it. S&P will be in the bottom left. We'll have the dollar in the top right. Let me get my charts lined up, which the dollar, by the way, continues to sink here. Going into the news, the euro is super strong. Gary, who was on our stream just previously, is probably happy about that. He mentioned he has got a long trade going on the euro. I know Frank is also long gold, so perhaps I'll swap out Spider with gold so we keep that on the radar. And again, guys, we got breaking news here. Check it out. All right, and numbers should be coming out here momentarily on the new candle. Here it goes. Dollar driving lower still. Euro pushing higher. NASDAQ seeing a push, trading at 14,285. Here goes gold trading up, 1976 printing here. And there goes that NASDAQ. Look at that strength coming in yet again. Dollar weakness. NAS is up. Gold trading around 1976 here. Let's see if we get some numbers. 46.9. This shows further contraction in manufacturing PMI. This is what the market was looking for. And so the market is happy about that, right? So we're seeing NASDAQ trading higher, gold, a little bit of a relief rally here this morning, euro trading higher, dollar giving back some of those gains. And wow, what a move. Tom, what's your reaction to all this? Any charts that you're paying attention to?
Yeah, euro US dollar was looking at a trade here when we got a break of this structure on the H1 retest to take price back up to here. And just the fact, I mentioned it to Frank, just the fact that that US dollar news earlier on was far better than expected, and the market just ignored it. The market wanted US dollar weakness almost. And now we've got this figure that is worse than expected, then, you know, I'm just going to see some short-term US dollar weakness, I think. We're going to see some real retraces on these, you know, on these US dollar pairs that were heavily oversold, you know, heavily oversold. So I'm expecting, you know, a bit of a retrace on a lot of these US dollar pairs.
Yeah, good stuff there on that euro. Again, popping pretty strong off of the news here today. Numbers coming out showing contraction in the manufacturing arena, which is, of course, something that we kind of need. We need a little bit of contraction in the economy in order to see that inflation number cool here in the United States, which, of course, will give way to a softening Federal Reserve, which will increase prices on things like gold. It will decrease the dollar. It will, cause rallies on the equities market there. So, Tom, I just want to say also, thank you for coming on the show. We had such a loaded show. We had Tom, we had Gary, we had Miko and Marco. It was a heck of a show today, and we saved the best for last with you, Tom. Thank you for coming on, as always.
Thank you, Nick. Always a pleasure.
Yeah, and before you go, I just want to let you guys know in the chat, make sure to go check out Tom. You know, when we bring guests on, we return the favor. Check out Simply Forex on YouTube. He's got great content over there. You can hear more from Tom and his technical trading approach. We were saying when I was taking my break earlier, Tom, I was just saying your charts are so neat and orderly, which I think are is part of the reason why people like having you on the show. So thank you as always, Tom, and we'll see you back on the next show.
Yeah, cheers, Nick. See you soon, mate. Thank you.
See ya. Yeah, guys, one heck of a show here today with ISM Manufacturing closing us out, PMI numbers showing the contraction that we were looking for. And again, this is causing things like the NASDAQ to rally. Let's go check that, guys. Let's make sure we're where we're still at. So again, dollar weakness coming in, breaking that 104 handle here, now trading at 103.78. We've got the euro trading higher, resistance coming in around 1.074. It will be very interesting for euro shorts. Can they hold this level? This euro has been trading off of the lows here this morning and showing a lot of strength. This is your 15-minute chart. Here's your 4-hour, which lines up with a pretty key level of resistance on this chart, right? So we talked about this earlier in the stream, and sure enough, now it's printing. We're coming into what, traditionally would be considered a really strong level of resistance in an overall downward trend. The question will be, how does price react as the dollar weakens here this morning and gives the euro a little bit of a lift? It'll be very interesting to watch following this ISM number, manufacturing PMI coming out, showing contraction. Will the euro actually be able to break out? One thing for the bulls out there on the euro, Is this going to break? And if so, does that give way to a bigger move higher? Same applies for gold, guys. We've got to give an update after this recent price action. Are we breaking out on gold? And XAU USD, we're going to pull it up, trading around 1973 here, and very, very briefly now flirting above this 1968. I think day traders may be able to take it higher, in my opinion. We could see a move up to 1980 as possible targets, 1980, 1982. Again, key resistance in that area. The real question for bigger traders on the higher time frames, if you're watching this like I am on the 4-hour, can we get above that 1980 mark? That's going to be the key breaking point, I think, to start actually forming a newer upward trend. And again, we've got more numbers coming out tomorrow, which could help us get there. We'll see how jobs numbers come out tomorrow. Guys, we've been mentioning it on the stream here today. And for those of you who are just tuning in, I don't want you to miss it. We're doing our summer sale right now, and it is one of the best offers that you're going to get on this channel. If you've been watching our channel and you like the Edge Finder, if you like our COT data, where we look at what institutions are buying and selling, if you like keeping up with retail sentiment, right now, we've got something special for you in the chat. If you send us a direct message, this message us right here, you can get access to our summer software sale, which gets you access to the Edge Finder Pro and all of our MetaTrader robots and indicators free. Plus, with this offer, for the first, we're only doing it for a certain number of people. It's a limited offer for a certain number of people. First come, first serve. If you want to be one of the people, message us right now. You're going to save $840 off of this. If you've been thinking about getting the Edge Finder, you are going to save $840 if you are one of the people that get in early. So we're doing a first come, first serve on the sale. We've done this before. But what we found is that when we get people set up with the Edge Finder, it's a lot of training and setup process with each person to make sure that they're fully understanding. We want to make sure the tool is right for you. If you want to be one of the people, it's first come, first serve. We've got a link right here. And again, we'll drop that link. It's in the chat right now. Click that link. And again, it is our summer software sale. This is the best discount price that you're going to get this summer. We've put in a lot of hard work on putting this together for you. And again, this is all the details for you. Message us now. Get in before again, it's a first come, first serve. We're only doing it for a certain number of people for this massive discount price. The best we're going to get on the Edge Finder. So there you go. And the MetaTrader stuff, of course, which comes free with it. All right, guys, so that's going to wrap up the stream. We had a loaded show today. We went for almost 2 hours. And if you appreciated today's stream, do me a quick favor on your way out. Well, first of all, hit the thumbs up button. And second of all, if you're one of the people who have been watching the show and you want that Edge Finder, click the link. It is the best price you're going to get for the summer. So do not miss it. Thank you guys for watching. Hope this was a helpful stream for you. And we'll see you back on the next one. Catch you later. As an aspiring trader, how do you take into account all of the driving forces in the markets at once? You need the Edge Finder. The Edge Finder allows traders to access powerful market data automatically. Access key sentiment analysis studies, such as the Smart Money Tracker, which shows what hedge funds and institutions are buying and selling. Or unlock the Retail Sentiment Indicator, which shows where retail traders are positioned now. Additionally, for traders looking to incorporate fundamental analysis into their trading, get access to our in-depth economic data scanners to find the strongest trends. The Edge Finder also ranks and scores all of your favorite currency pairs, commodities, and indices through our signals and watch list page. This page will show you the Edge Finder's current strongest buys and strongest sells by pulling together all of the data. Get our biggest discount of the summer. Get access to the Edge Finder, our MT4 and MT5 softwares, indicators, and robots, all in a single 20% off discount offer. Take advantage using the links and promo codes down below in the description.